Someone I know just closed on a house last month. Good job, stable income, never missed a payment in his life. His mortgage broker quoted him an interest rate that was going to cost him $50,000 more than his neighbor paid for the same loan, same house, same street. The only difference? 41 credit score points. Points that, and this is the part that should make you angry, were already gone. He had already paid down the debt. The score just hadn't caught up yet. I'm Yash, and what I'm going to show you in this video is the exact process he used to fix that score in 3 days, not 30, not 60, 3 days, and lock in the better rate before he signed anything. But that's number 4. Before we get there, I need to show you 4 other things that are probably costing you points right now without you knowing it, because each one builds on the last. And the 5th one, 5 minutes, free, 0 calls to make, might already be done for you. Let's start with the thing that almost nobody talks about. 1 in 5 Americans has a material error on at least one of their 3 credit reports. That's not a small number. That's 40 million people. According to a Federal Trade Commission study, 40 million people are paying higher interest rates, getting denied for apartments, losing out on jobs because of mistakes in a database they've probably never looked at, mistakes they didn't make. And even if your file is perfectly clean, there's still a problem built into the foundation of how the whole system works. When you pay down a balance, that improvement takes 30 to 60 days to show up on your score. The bureaus run on a lag, which means right now, today, your score is a snapshot of your financial life from 6 weeks ago. And every bank you walk into is treating that old number like it's the truth. Here's what I want you to hold on to. Every single thing I'm about to show you attacks that lag. They either speed up the update cycle, add information the bureaus weren't counting, or strip out information that was dragging your number down unfairly. 5 strategies, 5 different cracks in the same broken wall. The first one is about timing, and it's costing most people points every single month without them ever knowing why. Here's the question. When does your credit card company actually report your balance to the bureaus? Most people assume it's after you pay. It's not. It's on your statement closing date, which is typically 1 to 2 weeks before your payment is even due. So if your statement closes on the 15th and your due date is the 28th, the bureau sees your full balance on the 15th before you've paid a single dollar. Your utilization ratio, which drives roughly 30% of your FICO score, is being calculated on a number that has nothing to do with what you actually owe. The fix requires one change to when you pay. Pay your balance down before your statement closing date, not before your due date. Get below 10% utilization before that closing date, and the lower number is what the bureau captures. No dispute, no phone call, just a calendar change. The second one adds something rather than removes it, and it takes about 10 minutes. You've been paying utility bills, phone bills, streaming services, and rent for years. Your credit score has been completely ignoring every single one of those payments. There's a free tool called Experian Boost that connects to your bank account, finds that payment history, and adds it directly to your Experian credit file. Some people see their score move within minutes of setting it up. I'll be straight with you. This only affects your Experian report, and not every lender pulls exclusively from Experian. But for thin credit profiles especially, this is a free, legitimate boost that the bureaus weren't giving you credit for. 10 minutes, no cost. The third one has been around for decades and almost nobody uses it. It's called authorized user piggybacking, and it works like this. If someone in your life, a parent, a sibling, a close friend, has a credit card with a long history, low utilization, and clean payments, they can add you as an authorized user on that account. You don't need to use the card. You don't even need to hold it. What gets added to your report is their entire account history on that card, sometimes 10, 15 years of perfect payment history, low balances, and account age. That last piece matters more than people realize. 15% of your FICO score is driven by the length of your credit history. If your oldest account is 3 years old and you get added to a card that's been open for 18 years, your average account age moves significantly overnight. One warning, if the primary cardholder misses a payment or maxes out their card, you feel it too. This only works with someone you genuinely trust. But used correctly, it is one of the most underused tools in this entire space. Now, stop, because this is the one.
Everything I just showed you is real and it works. But what I'm about to explain is different in kind, not just degree. This isn't a trick. It's a federally supported process built directly into the mortgage lending infrastructure. And if you're planning to take out a mortgage, a car loan, or any major credit in the next 90 days, this single thing could be the difference between a loan that costs you $35,000 more and one that doesn't. It's called Rapid Rescore. Here's how it works. Normally, a financial change, paying down a debt, correcting an error, clearing a collection, takes 30 to 60 days to cycle through the reporting system and show up in your score. That lag just lives inside how the bureaus operate. Rapid Rescore bypasses it entirely. Your mortgage lender submits documentation of your changes directly to the bureaus on your behalf. The bureaus review the documentation and update your score, typically within 3 to 7 business days, and the cost to you is exactly $0. Lenders pay the fee, which runs roughly $30 to $50 per account per bureau. You pay nothing. Now let me show you what this actually means in real numbers. Research into mortgage rate tiers shows that the difference between a score of 679 and a score of 720 can carry an interest rate gap of 0.5% to over 1% depending on the lender and loan type. On a $350,000 mortgage, that gap compounds to somewhere between $35,000 and $50,000 in additional interest over 30 years. $50,000 because your score was 41 points lower than it should have been. Now imagine you paid down a balance 3 weeks ago. Your real score is already 720, but the number your lender's looking at is still 679 because the update hasn't cycled through yet. Rapid Rescore closes that gap before you sign anything. So why doesn't your lender just bring this up? Think about the incentive. If your score goes up, you qualify for a better rate. If you qualify for a better rate, the lender makes less money on the loan. The system is not designed to hand you this information. You have to ask for it specifically. Call your loan officer or mortgage broker and say those exact 2 words, Rapid Rescore. They know what it is. They will not volunteer it unless you do. And the fifth one, this one may already be done. In January 2025, the Consumer Financial Protection Bureau finalized a rule removing approximately $49 billion in medical debt from the credit reports of roughly 15 million Americans. The CFPB's finding was straightforward. Medical debt is a poor predictor of whether someone will repay a loan. It was dragging scores down without reflecting anything real about financial behavior, so they removed it from the equation. If you had medical collections on your report, they may already be gone. Some people have already seen automatic score increases without doing a single thing. The action step is 5 minutes and free. Go to annualcreditreport.com. That is the only government-sanctioned site, the only one that matters, and pull all 3 of your reports. Check whether those medical collections are still showing. If they are, you now have grounds to dispute them, and that process is also free. Here's where we are. 5 tools. No credit repair company, no monthly subscription, nothing illegal. Pay before your statement closing date and control the utilization number the bureaus actually captures. Set up Experian Boost and add years of payment history the bureaus were quietly ignoring. Find a trusted person with strong credit and ask to be added as an authorized user. Before you close on any major loan, call your lender and ask for a rapid rescore by name. And go to annualcreditreport.com right now to check if the 2025 medical debt ruling already handled number 5 for you. The system was not built to walk you through any of this. Banks profit from the gap between what you know and what they know. Credit bureaus make money from complexity. The entire infrastructure runs on the assumption that you won't look into it. You just did. Subscribe, because this is what we do every week. Take the systems built to work against people like us and make them impossible to ignore. See you in the next one.